Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me today is Ekta Batra. Continues to be another down day. The IT decline continues. Today, metals also taking it to the chin. But other than that, mid-caps, they are largely outperforming the benchmarks.
Hi, Sonal. Yes, absolutely. You know, it's been a down day for the markets, and for the IT index, it's lost around 8% on a week-to-date basis as well. Just giving you an indication in terms of the kind of sentiment which is really dominating the entire IT space at this point in time. But for the markets overall, the Nifty is at around 25,550 odd. We have the advanced decline ratio, which has not shown any kind of respite through the trading session. So currently stands at around 1,300 stocks advanced, to around 2,800 stocks declining. But let's get to our segment of the first segment on Midcap Radar, which is Midcap Movers. We have Gaurav with us to take us through all of the broader market stocks that are moving around in trade today. Gaurav, it's a dull day in terms of the key indices, but tell us about specific stocks.
Well, yes, indeed, it is a dull day for the market, but let's understand and let's see the companies who are still actually outperforming the market today. And we've got companies like GE Power. You also can look at Engineers India. If you look at the stock performance, it is up 13% because they reported very good set of numbers. Profit more than doubled for this year on a year-on-year basis. Apart from that, let's also not forget about TVS Supply Chain. Now, this stock is not only up today, but in the last 5 days, the stock has gone up almost by 30%. Let's also not forget about Physics Wala and Purvankara. Purvankara is also actually reacting on the back of the good set of numbers that they have delivered. Apart from that, we are seeing exporters who are again turning into green in a day today. So we've got companies like Gokuldas Exports, KPR Mills, Vardhaman Textile and Apex Frozen Foods. All of these companies are actually in green, up more than 5% in a day today. On the losing side, let's not forget about Muthoot Finance. Now, the company actually delivered good set of numbers. They also upped the guidance for their AUM growth. But despite that, we are seeing a profit booking in this company. The stock is down 11%. And then we've got companies like RateGain, where we saw profit actually decline almost by 50%. Cohance Life Science, there also we saw margins decline, EBITDA margins, and that is something which is pressuring the stock right now. And Cars Trade. Lastly, let's also not forget about the IT pack, as you mentioned, because most of the IT companies are in red. And we've got companies like Coforge, KPIT Tech, Tata Elxsi, Newgen Softwares, Birla Soft still in red and down more than 2%. So let's see if there is any revival in the IT pack. But at the same time, we have got gainers as well. And as you suggested, mid-caps currently at least outperforming with marginal gains to the broader market in a day today.
Okay, all right. Thank you so much, Gaurav, for joining us with all those names. It's a good time to get a technical check on the markets. Shrikant Chauhan of Kotak Securities is joining us now. Shrikant, every day it's another low. We are now down 267 points on the Nifty, above the 25,500 mark though. What are you suggesting? Do you think we could see further moves on the downside? What's the support level now?
Good afternoon, Sonal. Good afternoon, everyone. So, yeah, the market has broken all its important level like 25,800, and today it is failing to sustain above the levels of 25,600. In fact, if we go through with the option statistics, then there is good amount of call writing has happened at 25,600. So till the market is not crossing 25,600, we can see further more weakness in the market and we need to be careful. But yes, side market or maybe the broader market is doing well. And based on that, we can take some stock specific trade in this market. But for index, I think till the market is not crossing 25,600, we need to be careful.
Okay, all right. Till the market's not crossing 25,600, we need to be careful. So yes, there's definitely that amount of resistance which is coming through. But Shrikant, I'm sure you've been chatting with your clients through and through about the IT stocks. So what are you recommending on that?
Say for IT, most of these stocks have fallen to their extreme levels, and today's lowest level certainly going to act as major support for the market, because today the way they have fallen and now they are recovering from the lows, somebody must have taken active interest in the IT sector. But the way they have fallen, I am of the view that at higher levels we need to be careful and we should look for reducing some position instead of buying at these levels and trying to take any short-term trade. So it is better to reduce position at resistance level instead of buying at maybe we can say it is like advisable to avoid catching falling knife.
Okay, that has been the word on Nifty IT in general. Any individual technical picks, Shrikant?
So for individual pick, yes, number of stocks, they are doing well. They are recovering from their lows, and most of these stocks have crossed their important levels. We like Biocon. It is like in the range of 380 and 400 for last almost 6 months. And whenever there is a fall below 370, we saw active buying interest in the stock. After the result, I am of the view that the stock is stabilizing and it is heading for the levels of maybe 400 in the near term. So it's a buy at current levels with a stop loss close to 370. The other stock on which we are bullish is from the metal space. And in that specifically, if you see all these steel stocks, they are doing really well. So in that specifically, we like Jindal Steel and Power. There we have a bullish view. Currently it is around 1200, 1190. But while looking at its technical pattern, I think it is heading for the levels of 1300 and we can keep a stop loss around 1160 for the same.
Okay. All right, Srikanth, we're going to let you go on that note. Thanks very much for joining in and taking us through all of those views in terms of the technicals. We'll take a short break, but up next we'll connect with the management of Ingersoll Rand India to decode their Q3 numbers. Stay tuned. Welcome back. Well, for the markets, it's a weekday, we'd have to say. So the Bank Nifty, which was fairly resilient in yesterday's trading session, is also seeing profit booking today, so down around 0.7%. Those are the IPCA Lab numbers for you. The EBITDA is up around 15% this quarter. The revenue has grown around 6%. Margins have expanded around 200 basis points for IPCA this time. So 22.3% is where it's come in at. So overall, looking like a decent set of numbers operationally. The profit also doing well this quarter for them, up over around 30%. But let's focus a little more on the entire pharmaceutical space. We had Biocon, which came out with its numbers earlier today. And a couple of key takeaways is that the company has said that the biologics business, what really stood out was not really the revenue growth, but what they saw in terms of the margins this quarter. So they focused on the high margin geographies this quarter, and that resulted in a margin uptake in the biosimilar business. Separately, they do expect erosion in the legacy products in the generics business going forward. They've seen a successful launch for liraglutide, which is one of the GLP-1 drugs in UK, Germany. They were one of the first companies to, in fact, launch it in UK. And there is a launch coming up in the US as well, so that will be something to watch out for. And they expect growth within the GLP-1 space to be driven by liraglutide as well as semaglutide. When it comes to semaglutide, which is basically the generic version of Wegovy, they've looked to partner with companies in the Indian market which have a far greater reach. And that is basically how they would be approaching the semaglutide opportunity at this point in time. They do have partnerships, for example, with Ajanta Pharma as well in some markets. They have raised around $1 billion in terms of fundraising successfully in just the past few months, that is via 2 QIPs. So the company has indicated that overall the debt to EBITDA, which was at one point quite high at over 4 times, has come down to around 2.5 times. The focus is to bring it below 2 times and then eventually close it at around 1 time. So those were a couple of key takeaways from the Biocon management. As you can see, the stock is trending well, up around 1.6%.
It is. Actually, it is one of the big movers in an otherwise weak market. Thank you for explaining that to us, Ekta. And, while talking about result reactions, we've gotten some on the opposite opposite side as well. Muthoot Finance, for instance, was one of those stocks which reported good set of numbers. In fact, management on CNBC-TV18, they did raise their guidance from 35% to 45%, and 35% to 45% in terms of AUM growth. Despite that, the stock is down around 11.5%. The commentary was strong, the numbers were strong. Despite that, the stock has seen some profit booking. That's the texture of the market. Let's do one thing. Let's listen into what the management had to tell CNBC-TV18.
This quarter, the first 3 quarters have been good growth. We have seen in the last 3-4 quarters have been quite good. We have already grown the gold loan AUM by 36%. I feel that we should be able to do around 45% by the end of the year. We should reach that by 45% by end of the year. So that is, I think, something which we plan to achieve by the end of the year.
Okay, and that's Muthoot Finance. That stock really hammered in today's trading session, down around 11%. But the other space which is not seeing any kind of respite is the entire ETF space. So the Tata Silver ETF is down around 5% at this point. We have the Nippon India Silver ETF, which is down around 5% at this point. So remember that both of them have respectively lost around 22% and 18% on a month-to-date basis. So it's been a very, very volatile session for the silver ETFs, and that seems to be continuing. We'll take a short break, but a lot more on the markets once we're back. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. It's a lot about earnings. We are towards the fag end of the earnings season. Honasa is gaining a trade after reporting good set of Q3 numbers. Manglam is joining us now to tell us what worked this time around. Manglam.
Well, a couple of things that worked for the company. You know, if you look at the overall revenue growth of them, close to around 17%. And if you adjust for the settlement that they had made with revenue recognition in Flipkart, it's actually a 20% plus revenue growth that the company has done. And add to all of this, the operating leverage is playing out. So the EBITDA jumped from 26 crores all the way up to 65 crores. And the highest margin that the company has reported ever since listing, so closer to 11%. And to that as well, the management said that they will go ahead and perhaps see a 100 basis points improvement from these levels as well. The net profit has nearly doubled from 26 crores all the way up to 50 crores. If you add the adjusted, exceptional loss on account of labor code, then it is an even bigger beat than a 100% jump on the bottom line. All these factors led by a 30% underlying volume growth. Their key business, which is the Mamaearth business, growing upwards of 25%. Dermaco reporting nearly double-digit EBITDA margin, and the newer brands growing upwards of 25% as well. All these factors working well for them. The only fly in the ointment, however, is that the stock has already seen a big correction from the top, and it's still below its IPO price. So every time it makes a dash towards the issue price of 324 rupees, perhaps some supply comes by, and as a result of which, every time the stock moves towards the 320 mark, as we can see in today's chart as well, the stock sees some supply at the top. Currently holding with a gain of almost 4%, but as it moves towards 320, let's keep an eye out on how the price behaves.
Okay, all right, Manglam. Thanks very much for that. And let's move on to the top story that we're tracking. Indian IT stocks continue to see a sharp fall for the third straight session. The IT index has sold off about 14% just in the last 7 trading sessions as concerns over AI-led disruption continue to weigh on sentiment. Earlier today, we did speak to Vishal Sikka, founder and CEO of Vinay Systems, on the AI disruption fear. Listen in.
Things are always slower than we expect. Adoption takes time. Enterprises are very complex. They are like countries. Large companies are like civilizations. Some of them have been around for, hundreds of years, if not decades. So it takes a long time for and even in terms of autonomy, there is a lot of still advancements to happen. Similarly, in the services industry, there are dozens of service lines. AI's impact on those service lines is not all uniform. It is not, doesn't happen overnight to all of them. Some systems are much more complex than others. And so the rate of change is always as slow as the slowest pipe in the network. But having said that, I used to say this 10 years ago, 9 years ago, whenever that was. And it is here now. And yeah, we have a short window of time in which to sort of transform. I think we have to separate the potential, the promise, if you will, of this disruption from how it impacts in the here and now. In the here and now, you have particular projects that people are executing on, and if a client expects that you now do this project dramatically faster or cheaper or with less people or whatever, then that would impact the here and now. But that is something that takes time. That's what I meant by depending on the service line, depending on the nature of the work, depending on the team that is involved, and things like that. So there is the fear in general of the potential of what this can do to knowledge work. But then there is the actual reality of creating an enterprise-ready offering that uses these new capabilities to deliver those. So there is a gap between them. The gain in productivity because of using generative AI can be quite substantial. I have seen examples of 20, 30x productivity gain and things like that. The important thing is that do we want to keep looking backwards? Do we want to keep looking at tasks that we already do? And do we want to limit ourselves to what we did in the past? Do we want to be afraid of the disruption and automation to the things that we did so far that brought us here? Or do we want to look at the opportunities of what are the new things that I can do with what we have in our hands? And I think, I focus much more on the latter. I have a small company, and life is a lot more interesting when you think about, my God, we have this incredible ability. What can I do with it? And I think when I look at it from that lens, it is incredibly exciting.
Okay, that is the big story. We'll keep getting you more reactions on what AI could mean for IT services. But for now, we'll take a leave on this edition of Midcap Radar. Stay tuned. Your stocks when we return.